Good morning, afternoon, and evening to our guests. Welcome to Invest Africa's 2026 North Africa Outlook webinar, the second in our series this month. I'm Chantal Carrington, CEO of Invest Africa. With Invest Africa being a leading platform to drive capital from the capital hubs to Africa, we will be unpacking the African region's economic and risk outlook to keep our network informed as I navigate Africa investment. Today, we will look at how North Africa remains a critical economic gateway between Europe, the Middle East, and Sub-Saharan Africa, serving as investment frontier and manufacturing export hub. We'll delve into some areas of focus, including diversification beyond hydrocarbons, because with energy price volatility and decarbonisation gaining traction, North Africa is accelerating renewables, logistics, and manufacturing growth. It also has great gateway and trade hub potential, with it being strategically located, offering ports, transport infrastructure, and industrial zones that can link Europe, Africa, and the Middle East. We'll touch on its industrial policy and manufacturing ecosystems, considering special economic zones and regional value chain strategies. And of course, the balancing of political and reform risk. North Africa has a strong investment case, but there are challenges around governance, regulatory clarity, and fiscal sustainability, calling for structuring and local partnerships. So Naku, we are delighted to have you as expert to lead the conversation on how North Africa can capitalize on its macro and logistical advantage to host resilient and export-orientated growth stories. So I'll hand over to you for an introduction and to welcome Kenza and Adrian. Thank you.
Thank you, Chantal. Thank you so much. And as your introduction shows, there is so much in the North Africa region that we can discuss in this session. Perhaps I'll start with a brief round of introductions, starting with myself first. My name is Naaku Yatma. I'm the Senior Economist for Africa at SMBC, Sumitomo Mitsui Bank, and I'm based in London. Let me hand over to Kenza first to do an introduction and then followed by Adrian. Kenza, please go ahead.
Hello, Naku. Hello, Chantal. Thank you very much for having me in this webinar. So my name is Kenza Bunju. I'm the founding partner of Uriti, which is a regional law firm based in Casablanca and Paris. So we are regularly advising international finance institutions, large corporations, private equity funds, sponsors, developers on high impact transactions in Africa, with a strong focus on the infrastructure sector, the payment services, the industry, but also a very large, wide range of sectors in terms of investments, such as healthcare, hospitality, pharmaceuticals, large industry, education, etc.
Thank you. Thank you very much, Kenza. And Adrian?
Yes, hi. I'm Adrian Todd. I'm a partner at Dispatch Risk Advisory, coming to you from sunny Tunis, Tunisia, right in the heart of North Africa. Our firm does risk management consulting and security consulting as well. By trade, I was an FBI agent. I worked 10 years for the US government, mostly doing fraud and international money laundering investigations. So happy to be here and looking forward to get started.
Awesome. Thank you both so much for joining us. I think you both have a wealth of professional experience spanning various sectors that will be really relevant to the participants on this call. Welcome again to all the listeners. I think we have over 100 people joining on this call. So good afternoon, good morning, wherever you are, welcome. We would like to keep this as interactive as possible. So please feel free to drop your questions into the Q&A box as we move along. We'll also have a Q&A at the end. But as we go through this session, I'll try to pick up your questions if they're in the chat box. Before we hand over to our distinguished speakers, I thought it might be worth setting the scene a bit, first by speaking about more broadly the macroeconomic and political backdrop in North Africa, what we saw in 2025 and what we are expecting in 2026. Just to have a bit of bearings around the macroeconomy. North Africa is a distinct region, but is also composed of very distinctive economies. I think that's, something we all agreed on in a briefing session. The drivers across countries vary quite greatly. Starting first, going from the right to the left, starting with Egypt. In 2025, we saw increased macroeconomic stabilization occurring following the macroeconomic reforms that were implemented since 2024. Key focus areas for foreign investors in Egypt have been the FX sector, and glad to say that in 2025, this proved quite resilient. The exchange rate held quite steady, supported by USD weakness, but we also saw a strong buildup in central bank reserves and in foreign assets within the banking sector, allaying one of the major issues that had plagued the country in the 2022-2024 period. Growth is picking up. Inflation is moderating dramatically from the highs that we saw, in the mid-30s. As of last year, inflation ended around 12%, which is still high, but the trend for price pressures is definitely moderating in Egypt. So overall, last year was a period of stabilization for Egypt, and we expect the same continuing into 2026. Some of the headlines around Egypt, apart from the FX situation, have also been the influx of GCC investments into Egypt, and I'm sure we'll touch on that as we go along. Moving to the other side, to Morocco, that is a country that is, already well recognized for sound macroeconomic management. And in 2025, we saw growth strengthening, gaining around 4.5% of GDP year on year. Very broad-based as well. Its export industries ranging from automotives, agricultural goods, all appear to be performing well. And also climatic conditions were favorable. So water stress is important across the region, and in Morocco especially, agriculture is rain-fed, and water climatic conditions were favorable last year, and we expect the same to continue into 2026. So a positive outlook there. Turning to the middle countries in the region, there is more of a varied scene, both economically and politically. Algeria, although we've mentioned diversification at the start of the session, no one expects Algeria to be more than to diversify beyond hydrocarbons, which remain around 90% of export revenue, very much the bedrock of the economy. And what initial moves we saw around privatization or allowing private operators in other parts of the economy beyond oil seem to have shut down increasingly, and it still remains a state-dominated economy. In Tunisia, we see a fair amount of economic activity around some of the traditional areas, manufacturing, tourism, but very much the distinctive takeaway we see in Tunisia is still the unsettled political situation. And finally, in Libya, continued polarization between the two governments with occasional spats of confrontation around the sharing of hydrocarbon revenue. So that's just a quick whistle-stop run-through of the macroeconomic side. Turning now to our distinguished guest, and perhaps I can start with a question about, what you saw in 2025 and what you're expecting in 2026, particularly around investment. Perhaps with you, Adrian, if you could tell us a bit about the key sectors or the key investment areas that you saw in your transactions in 2025 and where you expect these to go in 2026. Floor is yours.
Yeah, sure. Thanks. Well, I mean, it's absolutely true, okay, that the region is highly diversified or contextualized. Each country is quite different. So we're going to be talking trends across the region. So yes, hydrocarbons is still the name of the game. But as we're talking in the intro, we're kind of pushing that aside. We're talking about diversification, and so where those opportunities are within diversification. So one thing that all 5 countries, and maybe we're including Mauritania from time to time as well, we all share an awesome climate. And I will definitely mention the sun as much as possible because of how many people in London that are on the phone call. So we rub in what we can when we can, talking about investments and attracting foreign direct investment. So yeah, the sun. We have the sun. We have great tourism. Tourism is still on the up and up. Again, talking trends across the board. We have beaches. We have yeah, just a lot of opportunities still like within hospitality and tourism sector. Also relating to the sun, my firm did a number of projects relating to due diligence with solar deals. And so we'll talk more about Europe, but green energy is a big deal and continuing, and we're anticipating growth with relating to solar and other clean energy. And finally, like you mentioned it already, the flip side of sun, and of course there's other factors, but water supply is an issue. I mean, it's a risk, definitely, but we're also seeing government-led investment in desalination, for example, like just recently Algeria announced a big desalination project. So yeah, it's hard to say what we're going to see across the whole region, but those are a few that we're highlighting this year.
Sounds good, Adrian. Thank you. Thank you for the broad view. Perhaps based on the countries in which you tend to focus on, could you give us a sense of country by country, what you're also seeing or expecting in terms of investment opportunities?
Sure. So, well, I'll leave Morocco over to Kenza, of course. I mean, you mentioned it with Algeria. We are seeing some at least verbal desire towards moving outside of hydrocarbons and perhaps an idea. I mean, they've done a lot of infrastructure projects with the Chinese and others. Has that flipped into like arms wide open? No, but some baby steps, like I in terms of allowing a little more tourism, and then certainly more within the big infrastructure projects. Yeah, so some slight changes, not like a huge flip though up to this point. Tunisia has changed a lot. In terms of it's still very much open for business. I'm not saying any of these countries aren't open for, everybody's open for business, right? But Tunisia does have an open posture, lots of tourism. I mean, that's the strongest. Definitely agriculture with rain has been tricky this past year or the past couple seasons. But we're seeing some of the within diversification, some of those innovative sectors, manufacturing, automobiles. I mean, there's a lot of, Tunisia's quite small compared to some of the neighbors, but a lot of little sectors making progress. And so, and yeah, there's some regulatory risk relating to the political and some systemic economic problems we can talk more about. But I mean, I also give it a positive outlook that Libya political instability, nevertheless hydrocarbons. So that's kind of still, yeah, I mean, that's oversimplified, but that's what we're looking at in Libya, supply chain around hydrocarbons and security sector.
Sounds good. Thank you so much, Adrian. Kenza, turning to you. What is your take on the investment landscape? What were the main investment drivers in 2025? How do you expect these to evolve in 2026?
Thank you, Anako. Thank you very much, Adrian. I think that like very interesting topic have been covered. So I think that what we can see, for example, in Algeria is that the investment activity in Algeria is more concentrated with very high value. we can see that the focus, I think that the regional focus in North Africa remains on energy, mining, and infrastructure. In Algeria, it is specifically large-scale infrastructure, so deals are fewer, but ticket size are larger, and often involving state or state-owned entities. In Tunisia, we can see from our perspective, we can see that it's more selective and targeted investment activity, like especially in renewable energy and some selected industrial projects. And we are seeing that in Tunisia, most bankable projects are supported by international financial institutions. So we can maybe have a quick focus on Morocco, which is currently the most active investment market in North Africa. A key driver here in Morocco is the preparation for the FIFA World Cup 2030, which is accelerating a major infrastructure investment cycle. So we are, for example, seeing major capital deployed into transport infrastructure, railroads, airports and logistics, stadiums, hospitality and urban redevelopment, water, energy, and social infrastructure as well. But also beyond the World Cup related infrastructure, Morocco has a structural and highly competitive advantage in energy, which is one of its strongest investment drivers. Morocco is already a regional leader in renewable energy with world-class solar and wind assets, strong execution capacity, and a clear long-term energy strategy. Morocco has a unique geographic position, but this is also shared with Algeria and Tunisia, of course, but Morocco is having a unique geographic position at the crossroads of Europe, Middle East, and Africa. Morocco is also having a large available land reserve and exceptional level of sun and wind. And due to that, Morocco plays a role as an energy and industrial platform rather than just a domestic market. And I think that Morocco is also very well positioned to become a future green hydrogen hub, in particular in the context of energy security and decarbonization, especially in the European context. We can also make a focus on the southern provinces, especially Dakhla, where we are seeing major investments in ports, logistics, renewable energy, and related infrastructure. And the region is increasingly viewed as a strategic Atlantic hub, opening on all the Sahel countries, combining energy production, logistic connectivity, and access to African market, but also international market. I think that we can also say that these investments are not cyclical or only event-driven. It's long-term, structural, and export-oriented investment anchored in energy, infrastructure, and logistics.
Thank you both so much. And I think we've captured a broad range from Adrian mentioning things like tourism, which is not just happening in North Africa, but seeing a global resurgence. Hydrocarbons, of course, is very important, to what you just mentioned, Kenza, about Morocco. And I would agree as well that in our business, we see a huge amount of inquiries, a huge amount of excitement around Morocco, both in terms of its domestic potential, but also its regional linkages to Sub-Saharan Africa and also to Europe as well. Perhaps to unpack a bit about Dakhla that you mentioned, could you tell us some more about the strategy there? Is it something that is being driven solely by state? So do we expect it to be more state-led investments and dependent around intergovernment agreements? Or do you also see Moroccan private entities or even foreign private entities, join in that vision of Morocco as a hub to Sub-Saharan Africa?
I think that it's a very large investment, and it can of course be like state investment, but also for example, in the Dakhla region, we are seeing a lot of of foreign investors in our activities. We are assisting American investors, European investor, Asian investor, of course, like Middle East investors as well. And we are seeing a very big interest in the southern provinces for the past year. And I think that following the UN resolution of last October 2025, I think that we also are expecting big interest and a big focus on the southern provinces for the next few years.
Absolutely. Thank you. And back to you, Adrian. When you mentioned the range of projects that you're seeing in Tunis, Algeria, etc., one question that we always get from our clients in the bank is who are these investors? Where are the flows coming from? What are the origins of foreign investment? And I know both you, Adrian, and Kenza are dealing with a lot of these marquee projects and inbound foreign investors. Do you see any specific trends in where investment flows are coming from? Is it GCC is always mentioned now with Egypt, for example, in real estate. Are there other distinctive regional issues that you see driving investment? Maybe starting with you, Adrian.
Sure. We're still seeing, so if we kind of bubble out, yes, we've got the GCC investment, but I think Europe has changed a lot in terms of as kind of world alliances restructure, but we're still seeing a lot of European money flowing down, and that's of course relating to them wanting to divest from reliance on Russian oil. So a lot of focus, and of course they want to do it through green energy. We've already discussed some solar, wind, and then looking for ways to looking for North Africa because of the proximity, looking for undersea projects, looking for how can we increase investment here. And the other side, dual hat of the European investment, is looking to counter migration. So a lot of the diplomacy that's happening, where the result of the diplomacy is some sort of investment deal, is relating sometimes certainly directly to countering migration flows, but also indirectly through economic opportunity. And whether those are because they believe the Europeans, that is, are trying to create more economic opportunity within Africa to keep people home, or whether it's the government extracting deals in order to, coordinate more closely on migration issues. Those are behind door details, but nevertheless, we are seeing big flows. But it's been interesting because, of course, a lot of the news for Africa around 2025 relating to big dollar deals was relating to the collapse of the development sector and the closure of USAID. Now, a lot of the acute effects of that is old news. That's last year. But what we are seeing is that, especially as we're talking about diversification, so not in these humongous projects, but the development sector, especially through things like microfinance and other training programs and such, would be supporting, perhaps artificially, some of the diversified projects. And so now we're seeing more of the effects and impacts on small to medium-sized businesses. And I'm talking more in homegrown small to medium-sized businesses, but also therefore small to medium-sized investment opportunities are being impacted from the reorientation of the development market. And I think it's something that I'm not hearing many people talk about, because when people are talking about what happened in the development industry, it's focused on Sub-Saharan Africa. And that's, yeah, like there wasn't the same huge amount being spent in North Africa. Nevertheless, those programs remained and were ceased, and there were impacts locally. So yeah, so while not at the same scale as in Sub-Saharan Africa, there is a reorientation. And now what I'm seeing in those programs, the reorientation is money flowing from Europe relating to migration and clean energy.
Thank you so much. Those are all very good points. I think to start off with, you highlighted the fact that EU policy towards Africa has, focused on two things mainly, energy and country migration. More broadly, I think the takeaway from what you just said is there is a strand of investment that is about aligning towards the priorities of the foreign policy priorities of, regional neighbors, whether it's the EU, the US, and what it is seeking, or GCC or other middle powers as well. And I think it's interesting that you mentioned that part of the ripple effects of the US aid closures has been an impact on SMEs that were supported by, aid programs. Building on that, another trend that we've seen, not just the US, and maybe the US did it very brutally and abruptly, but the trend of decline in aid had been going on for several years already. And the shift had been towards investments or greater commercial interactions. Even as you mentioned, the EU energy, EU migration policies, that shift had already preceded US aid closures. So that is definitely something that we're seeing, and another factor driving investment. And perhaps, Kenza, since I know some of the transactions that you see are on a larger scale and might involve international financial institutions or be led by government policy, do you see as well this impact of global geopolitical events in the investment transactions that you're undertaking?
Yes, thank you, Naku. I just want, before answering this question, I just wanted maybe to add a very small point on the trend of investment, as I think in terms of investment horizon, we are also seeing a move away in North Africa from short-term capital towards longer-term commitments. And I think this is also a big change that we are noticing in the region. And infrastructure, energy, and industrial projects typically involve investment horizons of 10 to 25 years.
Absolutely, yeah.
Based on all the project documentations. And investors today, as we can see, are less focused on rapid exits and more focused on predictable cash flows, strong contractual frameworks, and also very effective downside production. And this trend is particularly visible in Morocco for us, for example. So to jump on the global environment, yes, of course, we can see over the past year global volatility compounded by regional geopolitical shocks. We can, for example, mention the security crisis in the Sahel, in particular in Mali and Burkina Faso. And this has reinforced a very strong differentiation among African markets. And as you may know, Moroccan companies as a very big investors in Sub-Saharan Africa. So we are, due to this crisis, a lot of Moroccan companies and in particular lenders has moved their kind of regional focus, if we can say. So investors are no longer looking at Africa as a single risk block, but capital is being reallocated towards countries perceived as more stable and predictable. And this also, from a global point of view, this also clearly benefited parts of North Africa. But yes, we are facing regional instability that has increased the premium placed on political stability, border control, and institutional continuity.
Absolutely, thank you. And yet, even with the regional instability, it's interesting and great to see, back to your first point that you mentioned, that there is a change away, there's a shift away from shorter term investments to greater longer term capital commitments, and investors willing to take on that longer term horizon, even as they see, not necessarily in Morocco or in some of our countries of coverage, but neighboring countries or the broader region being more unstable or having political issues there. Thank you to those who have questions and have put some in the Q&A chat. Perhaps I will just turn to one from Mohammed, who is asking about Libya, where traditional banks, conventional investors are reluctant to go because of security risks. Yet we are seeing state-backed political investment from the likes of the Gulf, Turkey, or China. And his question is this capital looking for profit or is it buying political influence? And my response to that would be probably, the question leads to the answer, that we do see some element of political influence being sought from these so-called middle powers, the GCC, Turkey, seeking to not only secure long-term assets, but also to have political say and political stakes in those countries. And it's not only really restricted to the commercial transactions, but we also see security or military support being given, etc., for political influence. China's influence is also present, and I think not just in North Africa, but in Sub-Saharan Africa, we see China having a long-term strategic view of acquiring energy and critical mineral assets. So that would be my answer to this question, but I'll also open it to Kenza and Adrian in case you have any thoughts on that.
Sure. Yeah. Great question. Though I know Mohammed, he's a Libyan expert himself, so I would rather hear his answer than mine. But thanks for the generous question. Yeah. So, yeah. I mean, at first you think, well, anyone making an investment is always hoping they get lucky and make some profit. But I think you're right that they're understanding that this is an influence game, a proxy game. But in terms of investment, it is interesting because being in Tunis, so proximity very close. Now, Tunisia, if you're close watchers, very different than Libya. And but in Tunisia, people are often quite positive about Libya and like, oh, there's these positive changes. And then you take a step back and you're like, wow, there's still all the militias and entrenched competing groups and there is still nothing has really changed. And yet we do see some more openness to, I mean, I'm seeing it especially in hydrocarbons, the openness to like, okay, let's restart the conversation, more interest from people that have historically pulled out. So, I mean, it's like, okay, in some sense, nothing has changed, but in other ways, there's a new and different interest than in the past few years. So I think the market is starting to kind of accept that, okay, while things are very unstable, they're unstable in sort of the same way as they've been unstable. So is that another level of stability? I don't know. But yeah, so maybe not huge changes coming this year. And yet I think the market is seeing, okay, there's some changes coming. But not major changes. So a more comfort amongst in the hydrocarbons and rebuilding there.
Thank you very much, Adrian. That is really enlightening to know. And I we have seen some return of hydrocarbon investments in Libya, but it's really encouraging to know that maybe the investors that you're seeing are more comfortable with the current situation and see some, it's been relatively stable. Also, some of the foreign powers that were supporting both sides have exercised their influence or withdrawn support, which is calming things down as well, and that's encouraging greater investment. So thank you so much for bringing that to light. Looking at the Q&A box, we also had an additional question on investments within the region. And this is for the region something that typically, historically, has not been the case because they have been very separate markets. And maybe it's fair to say, when you look at Egypt, that is a market that's more oriented to the Middle East. If you look at Morocco, more oriented to Europe, increasingly to Sub-Saharan Africa, Francophone, Sub-Saharan Africa particularly. Tunisia, Algeria had also their European links, but these were all very separate markets and also politically had various restrictions on cross-border movement, much less investment. But in your view, have you seen any new developments about investment across borders within the region? Perhaps going to Adrian first and then Kenza.
Interesting question. I'm trying to think of an example, and Kenza, if you think of a specific example of like significant cross-border investments, I mean, certainly lots of cross-border diplomacy and security issues and all these. I'm not large scale. Yeah, nothing pops to mind. Yeah, Kenza, what do you think?
Yeah. So yeah, as I sense, not a huge driver, but maybe Kenza, you have a different perspective on this.
Actually, nothing popped to my mind as well, but we are seeing cross-border investments towards like Morocco and some Sub-Saharan African countries, yeah, for sure. But we are also seeing that the base of the investor base has become much more diversified. So like we are seeing European investor, but as well as investors from the Gulf and also Chinese groups, etc. But I don't know, Adrienne, if you have anything else in mind.
Other than, actual product lines that they're going to be, like some of the startups, I can think of some Moroccan startups that have like come over to Tunisia because it's kind of got similar flavor, similar issues, that kind of thing, but not in terms of, big scale investments.
Yeah, fair points. I wanted to go back, if we could, to the question to global impact or geopolitics, because I think this is the main theme on everyone's mind these days, even more so than macroeconomics. Geopolitics is driving all the volatility that we see today. In 2025, actually, it ended up being a fairly benign year, I would say, for North Africa and Sub-Saharan Africa, in that at the beginning of the year, the expectation was that a Trump presidency would lead to investor aversion to emerging markets as a result of a strong US dollar, as a result of higher interest rates, US interest rates. But the reverse completely happened. The dollar weakened, and that benefited a lot of the currencies in the region. Oil prices were actually well contained. Maybe not good for the producers, but still at a reasonable level for producers, but certainly for the countries that are net energy importers like Morocco, Egypt, it was a boon to have these more moderate oil prices. Yes, there were there were Trump tariffs and increased trade protectionism. But in terms of direct impact and near-term impact, we have not seen a huge adverse effect on our markets. But as we move into 2026, things can change. And are there any global geopolitical risks that are top of mind for you? Perhaps starting with Kenza, please.
Yeah, thank you, Nago. For me, the geopolitical shocks have not led to capital flight, but rather to greater selectivity and stronger structuring. So we can see that investors are favoring jurisdictions with clear execution capacity, bankable legal frameworks, and credible public counterparts. And sorry, we can also see a clear shift towards projects that can withstand external shocks, notably infrastructure, energy, export-oriented assets supported by long-term contracts and robust risk allocation mechanisms. So like this is typically our work. And in my point of view, the current environment has reinforced the role of multilateral and development finance institutions as stabilizing forces. Their involvement has become essential in mitigating political risk, reassuring private investors, and also keeping financing channels open in a very volatile world. So for me, the past years' geopolitical shocks have acted less as a deterrent, but more as a sorting mechanism. And
interesting. Yeah.
Capital is still flowing into North Africa.
Yeah.
But I think it's flowing toward stability, resilience, and long-term strategic value. And based on our experience and our interactions with investors, I think that investors are not avoiding the region. They are simply investing with great discipline, deeper due diligence, maybe also, and a very strong focus on risk management.
Excellent. Thank you so much, Kenza. Adrian.
Yeah, Kenza, I loved your phrase there, geopolitics being a sorting mechanism, because as I was thinking, of what's coming up this year and what's making, I mean, maybe more at a macro level, but the North African economies and who's in charge of them very nervous and will be a sorting mechanism is relating to Israel-Palestine. And part of that is that many North African economies have some underlying systemic issues. And now, Aku, you could talk to that much more coherently than I could as an economist. But like, for example, we saw Egypt take in 2024 the IMF bailout. Meanwhile, Tunisia declined to take the IMF bailout and instead took funding from the GCC and will really need additional funding in the future to keep the economy flowing. And so, you know, like all money that you take, all investments come with strings attached. And so lots of rumors about when you take money from the GCC, there could be strings attached relating to Israel, the Abraham Accords, and how those global and regional issues are going to play out. And so across North Africa, there is not unity in how to relate to that issue. Money talks. So those investment dollars, if you need them, the money talks. Yet the popular support talks very loudly too. Civil unrest and other political risks and domestic pressures are, this is a balancing game. So I do like Kenza, because of course Morocco sort of sorted itself on that issue. And so in an investment way that may have been like, well, it's here nor there whether it was the right move or the wrong move, but from an investment standpoint, yeah, that really was a sorting. And so we may see this upcoming year, the rest of the countries needing to sort themselves on that issue and take the results in the investment market.
Very interesting perspectives. I think, Kenza, I like the points you made about structuring, how investors are looking more at the robustness of structures, the protection of rights, the capacity of markets to execute. But I also like Adrian's comments about, the geopolitical and political themes are still relevant at the end of the day. I think when we speak to business people, before it used to be simply about FX or, interest rates, very tangible things. And now increasingly when we meet with our clients, they always ask, well, how do we deal with these global issues? Because you can't escape them. Everybody's very well aware that suddenly we're in a highly volatile geopolitical environment, and businesses are like, well, how do I incorporate that into my plans? And Kenzo's answer shows that there are ways to structure deals. There are contractual protections, maybe focus more around your operational risk, but also taking into account that operational risk is now heightened in this world that we live in. But then, Adrian, you're countering with, well, it doesn't go away entirely. And it could manifest. You might think that governments are aligned to one policy stance, but then if there is socioeconomic discontent, that could eventually lead to impacts on your business or your investments. And it's something that I think listeners will be weighing as they look at the region. I just wanted to turn to another question on the Q&A box that was for me actually not so much around operational risk or politics, but looking at how investors think about macro risks, particularly things like debt sustainability, currency volatility, IMF programs. The good news there, I think, is that in the markets where we see most activity, i.e., in Egypt and in Morocco, currency volatility is not an immediate issue. I mean, most certainly for Morocco, currency volatility is not an issue. In Egypt, now that we've seen a strong replenishment of central bank reserves and also foreign assets within the banking sector, currency availability has also declined as an issue. However, Egypt still has concerns around very high government debt levels. And in the current sort of stable state where you continue to have foreign portfolio investments flowing into Egypt, this is not a concern. But because of the high debt levels, any balance of payment shock, any flight to safety, hot money outflows is always a major risk for Egypt. So that has not completely gone away. Perhaps the constructive way to look at it is currently buffers are available, and the commitment of the likes of the IMF, UAE, even Qatar has reconciled with Egypt. All the capital that has been built onto Egypt over the past few years shows that, there's international commitment to Egypt as a strategic country, to support that. In Tunisia, and Adrian just said, the government's rejected an IMF deal, received some funds from the GCC, but there is still underlying uncertainty about its FX reserves, its macroeconomic stability, and increasingly, it seems that the government is unlikely to take on an IMF program because it does not want to make any further social cuts. But back to Adrian's point, GCC funds are increasingly turning away from just simple handouts to more either commercial investment or more conditional support to countries. We can speak very much at length about these topics, but maybe we can start to wrap up because I see we only have about 10 minutes left on the call. And we've talked a lot about risks, so I will not go into some of those risk questions that I was going to ask. But maybe to wrap up, I will just ask both Adrian and Kenza if you could give us your top tip or top three tips, whichever you want, top tip to the listeners. Considering investment in North Africa, what would be your top recommendations to them?
Sure, I can hop in first. Okay, not to be too cute, but my very top recommendation is to visit North Africa. Not just because tourism's a good investment, um, but we have a lot to offer. And I think that there's still a genuine misunderstanding in the larger investment community of not just that, okay, North Africa is very different from Sub-Saharan. It is Arab, but it's not GCC. Like, and yes, it's Mediterranean, but it's quite different, of course, than European Mediterranean. So it's the uniqueness of North Africa, and becoming more familiar and understanding of the cultures and the people and how they actually function, that will help everyone move forward with when we're talking about investment. So because a lot of other places where people are investing, I think there's a greater understanding of those, like, how many people are going to Dubai, how many people are going to. So come to North Africa. We have great beaches, we have great sun. Come see, come experience, test theories, get to know people of different stripes. And I say that also as a risk manager, because when you have some of those personal experiences, you will have your due diligence will be of higher quality because you'll know more about what you're looking for, what makes sense. You'll know when one person says something, how like, oh, well, that differs, and let me ask someone of a different stripe, that kind of a thing. So please come to North Africa.
Thank you so much, Adrian. Kenza.
Thank you, Adrienne. This is brilliant. So yes, come to North Africa first. And for my key recommendation would be take North Africa seriously and on its own terms. So this is not the GCC. This is not Sub-Saharan Africa. North Africa is a strategic crossroads between Europe, the Middle East, and the rest of Africa, economically, geographically, and also politically. It's a region with real execution capacity, deep talent pools, and the growing pipeline of bankable opportunities. So there might have some cultural adjustments, and also investors might need advisory services to navigate between all the regulatory, the political, the economical frameworks. But I think that for all investors looking for growth with proximity to Europe and long-term strategic relevance, North Africa is unavoidable. So yes, please come, see it, experience it, feel it. Also, it's very important to say how it feels. It's a very North Africa is very rich historically in terms of culture, diversity. Also, we have amazing diversity in terms of landscape, in terms of opportunities, etc. So, yeah, I think the key advice was given by Adrienne. So please come visit us, and do not hesitate to reach out should you need any information as well.
Thank you both so much. We did have 5 questions in the Q&A, so we're going to do a very quick speed round Q&A session. And I will start with the first one, which is from an anonymous member. He asked about North Africa not being a unified economic or political bloc, as we mentioned earlier. How do we see this evolving in the coming years, or what needs to be done? I'll take that one. I will say, in my view, we don't see that changing anytime soon quickly. We still see the historical linkages to Europe, GCC, that individual countries have to be maintained. And maybe the key trend that we see is more of Morocco and Sub-Saharan Africa being more integrated. So then the next two, let me hand to Kenza because they are more around Morocco and also looking at some new sectors. So first one on Morocco, Kenza, for you would be we saw coverage around protests related to the World Cup in Morocco. Should we take that seriously? And then the second one, and I think you've already answered this, but just to reiterate the point, Sabia Louise is asking, now we're seeing investors looking at new sectors like green technology, AI, digital technologies. Do you think that the region has the infrastructure, legal frameworks, political vision, etc., to sustain investment in these new advanced sectors? So two questions for you. First one, protests. How seriously should we take that? Second, how robust is the region to attract investment in advanced technologies?
Thank you, Naku. So the first question about protests, I think that, of course, we should take it seriously. And I think that everyone in Morocco is taking this very seriously as it was relevant protests, but the government has answered immediately and very positively with a very large investment program focused on education and healthcare. So I think that the Moroccan government is taking this very seriously, and we are now witnessing what would be done in the next few months or also few years. As you know, like it takes some time to redefine and build a very strong educational and healthcare system. For the second question, in terms of new investment opportunities, like mentioning AI, technologies, etc., I think that Morocco is at the forefront of this kind of investment. We have an amazing ecosystem of new projects and talents, also very involved in these new technologies. We are also seeing a lot of investment in that field, and unfortunately, we are not very active in this kind of sectors. But we can see Morocco is very active in the startup ecosystem, for example, but also in terms of data centers, in terms of new technology as well. So I think that Morocco is at the forefront of these new trends in terms of investment as well.
Fantastic. Thank you so much, Kenza. And for you, Adrian, two questions as well. First one from Mohammed, back to Libya. He's asking essentially, if private investors are too scared of the militia clashes, Tripoli in the east, how long do we expect to see Libya offering special deals, preferential taxes for investment into Libya? And the second one is on US policy. How has the recalibration of US policy towards North Africa since Trump 2.0 began affected US economic influence in the region? And what does this mean for US competing with Europe and GCC and other actors in the region? 30 seconds.
Very quickly. For Libya, I mean, I would expect they would continue to do it until it works. I mean, Libya, it's continuing to struggle in the ways we're all very familiar with. So it will take a lot to keep people for the long term to create a new situation there. For the US, I mean, everything's changing. And I mean, in North Africa, we have a lot of very centralized power, transactional type style governments. So maybe the US is just becoming more like North African governments in some ways. That's a little bit of a joke, but basically, it's both weakened power because of the confusion in terms of where the US is going to come out aligning. And then it's also stronger power because it's kind of some of those strongman tactics. That's on the diplomatic side. On the investment side, I mean, the US investors certainly do in hydrocarbons have a focus on North Africa, but I would say hydrocarbon investors are kind of a different type of investor anyway. So they're sort of used to a lot of these political shocks and changes. And so I think they'll adjust just fine. Maybe it'll take a little while though, but we'll see it by the end of the year.
Hey, thank you so much. We have just gone to the hour. Thank you so much, Kenza and Adrian, for sharing your immense transactional corporate regional knowledge with listeners on this call today. Really appreciate it. And let me hand back to Chantel to wrap up the session. And thank you to the listeners as well.
Thank you very much, Naku, and thank you for your excellent moderation today. I feel like we could have probably gone on for another hour to discuss everything, but alas. Kenza, Adrian, thank you so much for your expertise today. I think so many takeaways for our guests today, and amongst or amidst all the sort of global chaos we're seeing, it's great to hear the positive undertones for the region. So thank you so much for your time and your effort. For those who could only join us halfway through or may have missed some of the session, we will be posting a recording of the session on our YouTube and Spotify, so do keep an eye out on our LinkedIn for that. In addition, we've got a few more webinars in our Outlook series for the continent. Later today, we'll be covering US Africa, which should be really interesting. Next week, we've got East and West, and then the following week, we'll be having a session on Central Africa with a focus on Lobito Corridor, as well as a focus on DRC. So lots in the calendar. Of course, we'll also be in Cape Town alongside the Mining Indaba. So we really hope to see some of you there in Cape Town. Please just visit our website or get in touch for any more information. But I will leave it there. Thank you so much again to our speakers for such a fantastic and interesting session. Thank you all.